Hello and welcome here today to this video on what I call bad credit mortgages um, and you know what it's credit problems, whether it's you want to call it credit challenge, poor credit, bad credit, you call it what you want, but in the mortgage industry it really represents a major financing problem. Can you get a mortgage? Well, the short answer is yes, you can. It's possible. But you have to be prepared to accept higher interest rates and larger down payments. But myself, when I look at this, I see it as an opportunity in many cases to help someone sort of restore their credit, by guiding them through some various, improvement tactics to help get the credit score up and maybe get into more what you might want to call an A mortgage. Okay. Now, just to understand a little bit about credit yourself so that, it helps you sort of gives you better focus, okay? Credit scores can range anywhere from 350, uh, the lowest, up to 850, which is the highest. So 350 is a very high risk and 850 is a very low risk, okay? Now, there's also a scale to go along with that. And that scale goes from 0 to 9, okay? And then there's also two categories, one being revolving credit. So they title that with capital R, that would be like credit card payments and so on. Okay. The second thing is installment loans or payments, which they classify with a capital I, and that would be such as an auto loan. So the loan stays at a fixed figure; it doesn't revolve like a credit card would. Okay. The basic description is an R1 or an I1 is very good. An R2 and an I2 means that the two payments have been missed, and so on until you get up to R9. If you're getting into R7s and R8s, there's usually been a repossession involved, so that would likely point to a vehicle. But the higher you go in the scale, the lower the impact is a lower credit score, and then you become a very high risk. High risk where the lender has to look at it and say, well, you know, how can they manage their mortgage payments? Well, they couldn't manage their visa payments. Okay, so you're looking at this way. So how do you improve this? Okay, well, there are a few factors in establish a good credit score, involving mainly payment history, maybe the dollar amount, the length of the time that the credit's been in place, if there's new credit involved, and when they can see that, when they're looking at this, they can see, is it a poor credit score? It's now time to work on improving the problem so that, you can get that person into a mortgage. Okay, so this is what I do. So your mortgage broker, your mortgage agent is going to look at this as most likely an opportunity to help you. Now, the process is not an overnight. It may take a few months, could take 6 months, could take a year, um, but you got to start working at some point to improve that. Now, it starts with this, okay? I would advise everybody, you got to start making your minimum payments on all of your debts, okay? And I'm going to take one of them, one of the higher ones, and I'm going to urge that person to focus on making higher payments on that one and to get it down. Because one of the objectives is not to ever be at the limit of what your credit is, maybe as high as 50% and no more than that. Okay. When you go to the limit, it's really viewed as poorly and your credit score goes down dramatically. So once I've seen the results of getting that limit down more to, like the 50 to 60% mark, the credit score automatically starts to climb. And I can tell you the difference here too is that, if you had a credit score of 450, well, you're probably going to be paying a rate of in the 9% plus range. Whereas if your score was over, say, 680 and up, you're probably going to be in the mid threes as where they are today. Okay. So there's a major impact here and it's worth really paying attention to it. Okay. So don't max out your credit. Make payments on everything. One tactic that I do use is trying to get a consolidation of debt to sort of limit the amount of exposure that the person is experiencing, because again, that does bring down your credit score. Okay. And in some cases, where people already have a first mortgage, I will go as far as to sometimes nowadays, and I've done it fairly often, is to, suggest that let's get into a second mortgage. It's going to cost more because of the rates are so high, and then there's fees involved. But sometimes at the end of the day, it's the best and the only solution to clearing out these debts and getting them out of the way. And once we accomplish that, then we can take that consolidation and merge it into a good first mortgage. Okay. So I hope this is helpful to you. I hope if you can utilize some of this information, you will improve your credit score. Call me if you're in need of help. It doesn't cost anything. My services to coach you along in this are free if you want to call it that. Okay. But it is maybe the more uh, a practical approach or more realistic approach to home ownership for your particular situation. So again, my name is Dennis Street. I'm with Mortgage Intelligence. Please feel free to contact me at any time. I'd be more than happy to help you. Have a great day and good luck with your credit. Thank you and have a great day.